Hey, how's it going, PC team? In this video, we are going to talk about what is the level 2. It's a very surface level video talking about how to use it, how to read it. It is the most important tool in the entirety of trading, period. Maybe other than joining the PC team, is the most important tool for your success when it comes to making money trading. More important than charting, seriously. So what is level 2? The last thing is predicting breakouts utilizing level 2. Now, this is a very advanced concept, so if you guys want to learn how I've made hundreds of thousands of dollars using this one simple concept on predicting breakouts utilizing level 2, go ahead, either upgrade to becoming PC Plus if you aren't already, but if you are, head over to the advanced concept section and watch predicting breakouts utilizing level 2, one of the best lessons I've ever done. Go watch it. If you guys have never seen level 2 before, then this is mine. If you have seen level 2 before, you might be wondering, that looks a little different. I'm going to tell you why. I use Hammer. You guys probably have never even heard of Hammer until this point, unless you guys watch the recommendation videos. And the reason I use Hammer is because the coding potential in your level 2 is amazing, and I absolutely just love it. It is my absolute favorite, and I'm going to tell you guys why. Now, if you guys use Thinkorswim, Moomoo, TradeZero, Lightspeed, DOS Trader, all of them, they're going to look like this. This is my Lightspeed one. And I'm going to show you, this is my Thinkorswim one. Sorry. I'm going to show you guys the differences and why I love mine. Now, first of all, what is the level 2? Well, the level 2 is the auction block. You can see orders that are trying to be filled, that have not been filled yet. This is super important because if you can imagine, if you see a humongous buyer before it's about to get filled, what do you think is going to happen to the stock? Probably move up. If you think you see a humongous seller at a certain point, what do you think is going to happen to the stock? It's probably going to go down. So we're going to talk about, first of all, how to read it. Now, on the left side, if we're just looking at the left side, nothing on the right, just the left. The left side is strictly all buyers. Okay, everyone on the left side are buyers. Now, the top bar is the highest buyer. So someone is wanting to buy, from left to right. So from volume all the way over to bid price. Someone's trying to buy $50,000 worth of stock, which is 4,800 shares at $10.20. Okay. They are not going to be guaranteed to be filled because someone hasn't met them at that price. They're trying to get a better price than what the market price is. For example, if I wanted to buy stock right now, I would have to buy it at what? The lowest seller. Okay, the cheapest seller I'd have to buy it from. For example, if there was a car auction and someone wanted to sell their car for $100,000 and I came in at $90,000, but they said the absolute minimum I'm taking is $100,000. Are they gonna? Am I going to get the car? No. If someone comes in with $100,000 cash, they're going to get the car. However, if you're trying to get it for $90,000 and someone's like, "Hey, I'll buy it for $90,000," you never know if someone's going to say, "Sure, I'll take it off my hands for $90,000." But if you want to get in the stock guaranteed, if you want to buy that car guaranteed because you love it, offer them $100,000. It's the same concept. So on the right side, someone's trying to sell $1,000 worth. Which is equivalent to 100 shares of this company at $10.29. Now, they're not going to be guaranteed to be filled, okay? Because if you're the guy selling the car and the highest buyer is like, "Man, I really want to buy that car for $90,000," you're like, "No, I need $100,000 for it," and everyone walks away, you're stuck with the car. Same example here. If no one wants to buy it for $10.29, then you're stuck with the shares at $10.29. Period. Now, these guys are called makers of liquidity, and we're going to talk about that in a minute. But if you go down a row, you can see right here, someone's trying to buy $1,000 worth of stock at $100. Is that a spider? Oh my gosh, that's a disgusting spider just flew across my screen. That is gross. I'm going to continue. Okay, that threw me off my game a little bit. And someone's trying to buy at 10.16. So they're saying if the stock price goes down down to 10.16, I'll buy it. Someone's down here trying to buy it all the way down 500 shares, which is equivalent to $5,000 worth of stock at 10.07. If you're wondering how they got this number, you just multiply the amount of shares by the price you want to buy it, and it gives you how much volume it is. Now, on the right side, you can see someone's like, I really just want to sell my $100,000 worth of stock at 10.48, and I'm not going to touch it until then. Well, if the stock continues to increase and the highest buyer now comes at 10.48, well, guess what? Your order's going to get filled. Pretty cool, right? That is how you read the level 2. Now, if you are an unfortunate user and you're using a commission-free broker like this, you are going to be stuck with a poopy level 2. And the reason why I say that is there's a lot of mathematics that are needed. You'll get used to it eventually, but it's not as easy as what I like. So, for example, From left to right, it shows you the exchange it's being sold on. Do I care what exchange it's being sold on? No, not really. I've never found, to this day, someone can come in and critique me on it, but it does not matter if they're selling it from the ARCA, from the NASDAQ, from the BATS, from the NYSE. It does not matter to me. Okay, it's an order that's going to get filled regardless. So someone's trying to buy not one share. In this case, it's actually 100 shares. So what you do in these commission-free brokers is you have to multiply these numbers by 100. So 75 is actually not 75 shares. It is 7,500 shares. Okay, so you always have to add 2 zeros to the end of this. So sometimes it can get really hard because you're like, oh, how much is that? And then you're going like, okay, how much is that in dollar amount? Okay, so 75 times 00 is 7,500 times 230. Oh man, is that like 15,000? And by that time, you're like, crap, the order's already filled. It's a lot of numbers you have to do. The reason why I like this one is it automatically does it for me. It makes it nice and easy to read. And I'm going to take it a step further. So these work absolutely. These level twos work like a charm. However, I just like to optimize stuff, and I found hammers is the best. So that's how you read it. The buyers are always on the left because it is the price ascending, right? Descending from highest buyer to cheapest buyer, and then the sellers is price ascending, the cheapest seller to the most expensive seller. Okay. Now let's talk about what makes mine different. We already talked about that. Advanced concept. J Money in the chat. We're talking about Minecraft. Yo, raise your hand if you've played Minecraft. I used to have a Minecraft YouTube channel years ago. Don't judge me. It's when the game first came out. And if you hate Minecraft, I don't know if you should be welcome to PC. I'm just kidding. Anyway, what are block orders? Minecraft has nothing to do with this. I just thought it was funny because when I think of block, I think of Minecraft. So block orders are big institutional orders or big buyers or sellers, period. Block orders are orders on my level 2 that I have preset. So for me, every order over 5,000 shares is a block order. For example, this almost became a block order. 200 shares more and it would have met the 5,000 share requirement of the stock would have been a block order, which is I want to highlight because it's a little bit more important to me if it's a bigger buyer or seller than 100 shares, right? So for example, if I see 10,000 shares on the right, the block orders are always highlighted yellow for me. If I see 10,000 shares, that's a $100,000 buyer or seller at 1048. I want to make sure if I'm holding the stock, if it gets to 1048, if that order doesn't get filled and is kind of facing some resistance and just tapping and can't break that wall, I want to be careful because if that order forces the stock price to go lower, I want to know what price that order is at so I can sell beforehand. Same thing with a big buyer. If I am buying the stock up and there's a huge buyer that comes in, a block order, and it starts to get filled, I'm going to want to see that price move higher. I might add to my position before that order gets filled. Now, on these crappy level 2s, you can't see block orders, so you're just going to have to be paying super close attention. Right here, it highlights in yellow for me. Now, again, it can be tough because if you're trading a really cheap stock, like a $1 stock, a 5,000 share order is common. Now, a 5,000 share order on a $10 stock is a little bit more expensive, okay? So when I think of block orders, think of Minecraft. Now, block orders, like I said, are just big-time buyers. It doesn't have to be an institutional buyer or trader. In fact, when you're trading small cap, and the reason I do is because most institutional traders don't trade it. It's going to be the big wig traders. Sometimes my orders will be block orders. So that's pretty much it, guys. That's how you have a basic understanding on how to read level 2. Again, Hammer is indeed my favorite. A lot of these other brokers are just inferior to Hammer's level 2. Make sure if you guys are on a different broker that you're subscribed to all exchanges so you're not missing any orders. I find this very common. If you're just only having the NASDAQ alerts or something like that, you might miss out on some other orders that are being fulfilled through different exchanges. It's very important. Be subscribed to all of them you can.